What's more dangerous for a trader, the market or their own emotions? Most people think strategy decides everything, but the truth is strategy is only half of success. The other half is the ability to manage yourself and your risk. Today, we'll break down how psychology and risk management directly affects results. You'll see that even the strongest strategy can fail if a trader doesn't control emotions or allocate capital properly. In binary options, there are no stop losses and no early exits. There's only expiration time. Risk management works differently here. You already know how much you invest and how much you can earn. So the trader's task is not to guess every trade, but to manage a system of actions. A real trader differs from a gambler by controlling the process, choosing trade size, expiration time, and entry conditions. Mistakes are inevitable, but they don't mean defeat. They are simply wrong actions that need correction. Stable account growth comes when you strictly follow your strategy and don't increase stake size under emotional pressure. In binary options, discipline and repeatability of decisions are what delivers results. Imagine an account of $200. The trader works with a fixed trade size, $20, 10% of the account. First trade, forecast for growth based on a pattern plus MACD confirmation. Trade closes in profit, payout $36. Second trade, incomplete signal, price didn't touch support, trade closes in loss, minus $20. Analysis, mistake wasn't in the strategy, but in breaking entry rules. Correction, trader records the error type, returns to the system, and continues with the same trade size. Third trade, full signal, pattern plus support touch plus MACD. 3-minute expiration. Trade closes in profit. Payout $36. Result, account after 3 trades, 232. There was a mistake, but it was corrected without raising the stake and without emotional chasing. That's proper risk management, fixed trade size, repeatability, and rule control. Now, let's test your attention. On screen, price movement in a trend. RSI shows around 70, meaning the market is nearly overbought territory. Question, what happens next? Will price continue rising with the trend or start a pullback? Pause the video, rewind, and carefully review the chart again. Write your forecast in the comments, call or put. Watch until the end and I'll show you how this setup actually played out. If you enjoy this task-based format, support the video with a like, and if you're new here, subscribe so you don't miss future interactives. Emotions are a trader's biggest enemy. Even the strongest strategy breaks down if you trade under emotional influence. The most common mistakes: the urge to win back after a losing trade, the euphoria of profit when you immediately want to raise the stake and enter again. In both cases, the trader stops following the system and turns trading into gambling. The solution is simple but requires discipline. Always follow the plan even if it feels like the market is giving a chance. Take breaks when tired or after a series of trades to restore clear thinking. Keep a trading journal. Record every trade, its reason and result. This helps you see where you slipped and what needs fixing. Psychology isn't abstract, it's concrete actions that keeps you inside the system and stops emotions from controlling your account. Even if you know all the rules of risk management, emotions can still interfere. That's why many traders use copy trading to reduce psychological pressure and follow trades of experienced traders who've been in the market for years. In my Telegram channel, you get VIP access, signals, copy trading, and ready-made strategy setups, 95% successful trades, the result of precise analysis. You start with just $50 and it's a great way to feel confident in your first steps. Now let's check how the setup worked out. Everyone who gave the right forecast, congratulations! You understood the information correctly. And if you didn't guess, don't worry. You can take my courses as well. Don't forget to join Telegram. Discipline in risk management and emotional control is the foundation of successful trading. Strategies only work when you strictly follow them without deviations or impulsive decisions. Remember, psychology is more important than any technique. Even the most accurate indicators won't help if a trader gives in to emotions. For beginners, copy trading is an excellent solution. It helps avoid emotional mistakes and immediately apply strategies in practice. Want to use strategies correctly and without extra stress? Join my VIP channel and start earning alongside experienced traders.